Creative Estate Solutions, sharing our knowledge on real estate and investing.
From seasoned loan to dream home, a step-by-step guide. Buying a home is a significant life event, and navigating its financial intricacies can be overwhelming. While the traditional method relies on saving cash for a down payment, using a seasoned loan as the down payment unlocks an alternative path. Let's embark on a hypothetical journey illustrating how it works. Meet Sarah. Sarah, a 32-year-old marketing professional, dreams of owning a home but struggles to save a large down payment in the competitive San Francisco market. She diligently contributes to her retirement plan, which has accumulated a healthy balance over the past 5 years. This seasoned retirement account could be the key to unlocking her dream. Step 1. Explore loan options. Sarah consults a mortgage broker who informs her about home equity loan, HELOC, and cash-out refinance options. Both allow her to tap into the equity built in her retirement plan, transforming it into a seasoned loan usable for a down payment. HELOC. This line of credit offers flexibility, allowing Sarah to withdraw funds as needed. However, variable interest rates can pose risks. Cash-out refinance. This replaces Sarah's existing retirement loan with a new one, providing a lump sum payment upfront. Fixed interest rates offer stability, but closing costs might arise. Sarah, prioritizing stability, opts for a cash-out refinance, ensuring a fixed interest rate and knowing exactly how much she has for the down payment. Step 2. Seasoning the loan. Remember, the loan needs to be seasoned for 60 to 90 days. This means waiting that long after receiving the funds before using them for the down payment. Sarah diligently waits, allowing the loan to age in her bank account, establishing a clear source of funds for the lender. Step 3. House hunting and negotiation. Equipped with her seasoned loan and pre-approval letter, Sarah embarks on her house hunt. She prioritizes properties where her seasoned loan, combined with savings or potential seller concessions, covers at least 20% of the purchase price. This avoids the need for private mortgage insurance, PMI, saving her money monthly. Negotiating. Sarah emphasizes the strength of her seasoned loan and her financial stability. The seller, knowing the funds are readily available, might be more open to accepting her offer. Step 4. Closing the deal. After finding the perfect home and negotiating a deal, Sarah enters the closing process. She provides required documents like bank statements and the cash-out refinance paperwork, proving the seasoning timeline. Finally, after fulfilling all legal and financial requirements, she signs the closing documents and officially becomes a homeowner. Additional considerations. Tax implications. Consult a tax professional to understand the potential tax implications of using a retirement account for a down payment. Impact on retirement. Withdrawing from retirement funds can affect your long-term financial goals. Carefully weigh the trade-off between homeownership and future financial security. Alternative options. Explore other down payment assistance programs or consider a smaller home that requires less of a down payment. Remember, while using a seasoned loan offers advantages, it's crucial to understand the risks and implications. Seek professional guidance, carefully assess your financial situation, and prioritize informed decision-making throughout the process. By following these steps and considering the complexities, Sarah's story demonstrates how a seasoned loan can pave the path to homeownership. With careful planning, sound financial decisions, and the right guidance, your dream home might be closer than you think.
Creative Estate Solutions, sharing our knowledge on real estate and investing. Creative Estate Solutions, sharing our knowledge on real estate and investing.